All right, good morning. How are you guys? Woo! What? You're acting like you can't hear me? Oh, come on. I think we all know that's not true. So welcome. Thanks for coming to join us this morning. We're always excited to have you every day. I see some new faces too, which is even better. I like the new faces. So for those of you that don't know, Lift the Rock is a program of the Venture Center. We present it every single week, Tuesday mornings at 9 a.m. And the whole idea is that we help connect the existing business community to the entrepreneurial community. So that's your job today, is you're going to think in a few minutes about who you know that our presenter Grant needs to meet. But before we get started, I want to give a special thank you to our friends at the Little Rock Regional Chamber of Commerce for all that they do to support entrepreneurism and business throughout our region, as well as to our friends at the Little Rock Tech Park for allowing us to use this great room. I mean, you can't get any better than you know, the great color in here in this space. And if you haven't taken a tour of the brand new shiny Little Rock Tech Park, you should totally ask Brent to give you a little view of this space because it's really, really great. While we're here today, I encourage you to share a little bit of love on social media. You're going to use the hashtag Lift the Rock because that's where we are today, right? At Lift the Rock. And you're going to tag the Venture Center at Venture Center. And you can find our presenter, Quotanda, at Quotanda. I always enjoy when people are kind to us and keep their Twitter handles simple so that we can actually find them and know that we have found the right people. All right? So while you're here today, if you need Wi-Fi, as a Venture Center member, you're able to hop onto our screaming fast 1 gig internet up and down. It's awesome. If you want to know more about membership, I'd be happy to talk to you about that as soon as we're done here. But if you're not yet a Venture Center member, you can get onto the Tech Park's Wi-Fi, and this is their fancy new password. Yeah, you're welcome for that. Somebody joked yesterday that they got carpal tunnel typing it in. But you know, it's clearly secure, and it's a little bit of an homage to our friends Blue Sail Coffee in the lobby. Right? So I'll give you guys just a second to get that in so you can get online and share some pictures and whatnot. And all right, so now we're moving on to our next question, which as always is, what is it that startups need to be successful? This is interactive, right? Okay, you're cheating. You already know the answer, right? So it is connections. Capital is great. Connections are better because connections can help you get to the capital. And to that end, today's presenter, Quotanda, needs to meet these kinds of lovely individuals. They're looking for connections with decision makers inside of international banks and international banking institutions. They're looking for decision makers inside of universities and colleges. They want to talk to governments that are expanding education initiatives or access to education initiatives. And as always, they are looking for investors. So think about who you know that might be able to help them. Grant's going to tell you all about his amazing company, and you're going to learn a little bit more about why these are the right kinds of connections for him to make. And we're going to think about who you know here in just a few minutes. And right now, we're going to welcome Grant. We're going to put a ton of energy into the room. He came here all the way from Mexico City just to talk to you guys this morning. Yeah, sales, right? So here you go, friend.
Cool. This is not working. Should I use that one?
You're not working? Totally. There you go. Is this one on?
It's on. Should I turn it off?
We should turn it off just so there's not weird feedbacky action. Grant with the 2 microphones.
Cool. Good morning. Good morning. So, let's see if this works. It does. Great. And this? This is working now? Yeah. Okay, perfect. So yeah, my name is Grant Taylor. I'm the co-founder and CEO of Quotanda. Our mission is democratizing access to education, and we provide a global gateway for student financing. So let me tell you a little bit about how I got here. I went to business school in Barcelona, and it was an IESE business school, which is a top global business school. I found that 90% of my class, that 90% that wasn't American, didn't have access to education financing. So Americans, we complain about the student loan crisis, but we do have options. Internationally, those options typically don't exist. So that is a big problem, not just at IESE Business School, but all around the world, limited student financing options, right? In Mexico, as an example, only 2% of the college-age youth, that's of the 12 million, Only 2% have access to education financing today. So this is a problem that we're looking to solve, not just for Mexico, all around the world. And again, it is a global solution. This is advancing for me for some reason. I'm not sure why that is, but yeah, this is Luis. So Luis has a big problem in that he applied to the public schools in Mexico, and like 70% of the people who apply, he was rejected. So if you can't go to public school for university, you got to go to private school, which means you got to pay. His parents can't pay for school, which means, well, he can't pay either. So he's got to apply for a loan. We jumped a little bit here, but he went to the bank, waited in line, filled out paper applications, typically like that thick, submitted his loan application, and after a month of waiting for a decision, he was declined. And he doesn't know why. That is an awful customer experience. And this is banks that should be, trying to recruit students like Luis. And this is what it looks like for the bank, right? It's a people-intensive, paper-intensive process. It's expensive. Typically, the people at the banks don't really know the student loan product. They don't have a lot of time, and it's just a tremendous workload for them. Also, banks like Scotiabank in Mexico have an average client age of 45. Students are the future of any retail bank, and it's critical that they have ability to attract students. And that's exactly what Quotanda does, right? We provide a turnkey solution for banks to quickly launch student financing solutions, right? And this is mobile enabled, so students can apply 24 hours a day on a mobile device from their couch. It's an immediate loan decision and specialized customer service. An immediate loan decision means if they get rejected, they also get a reason why they're rejected, and they can potentially change that application and resubmit and get approved. On the bank side, again, this is a tremendous opportunity for customer acquisition of a high lifetime value customer, and we'll come back to that. It's a new loan product, and it's minimal upfront investment. So again, students are very high lifetime value customer. Banks like CIBC in Canada have back-tested their portfolio over the last 20 years and seen that students are actually their highest lifetime value customer. I think that's the case for a lot of banks, although I think a lot of banks haven't back-tested their accounts. So again, Quotanda provides a turnkey solution. It's called lending as a service. Actually, my co-founder pioneered this business model in the US about 10 years ago, built a tremendous business here, empowering banks, right? We're not competing with banks, we're empowering them. But we're not just empowering banks, we're also allowing banks to partner up with universities, foundations, and governments to lend even more, right? So universities can provide some type of guarantee or risk share agreement that allows banks to lend to more students. Foundations and governments can lend through or offer scholarships through the bank to make it easy, and it's all run by Quotanda as a lending as a service platform. This is a huge global market. $4.5 trillion worth of education spend on an annual basis. In Mexico alone, Quotanda revenue can be over $1 billion a year. So lending as a service, this business model creates a revolution in lending, and this is what happened in the US and what we're about to enable on a global basis. So in the US in the early 2000s, about a dozen banks dominated student lending. Now there are hundreds of student loan solutions or options, and what's the difference? Why did that happen? Well, companies like my co-founder Bill Hubert's company, Ecology, allowed hundreds of lenders to launch student loan programs. Companies like SoFi, Wachovia, launched on Bill's platform. And we've rebuilt that platform in the cloud. Now it's multi-currency, multilingual, and we can launch it anywhere in the world. And Quotanda is the only international or global lending as a service platform that can do that. And we can launch loan programs in a matter of weeks. So what exactly do we provide? Instead of having to fill out a lot of paper, and have to go to the bank and wait in line and do that whole paper process, they can apply on their mobile device from their couch, 2 o'clock in the morning, and again, get an immediate loan decision. This is custom underwriting, so it's using the bank's risk criteria. We can add to that with alternative data, so that's social graph scoring, academic credit scoring, sorry for it keeps advancing, psychometric scoring. So This is what we just make it very easy for students to get a loan decision and for banks to offer financing that's based on their risk criteria. We also give immediately a contract, which is as soon as the student is approved, they get that in their inbox and they can sign that electronically without leaving their couch. So we also provide dashboards for borrowers. They can log in, they can see their amortization table, view their historic payments, make a payment online. For lenders, they can see all relevant information about their portfolio, how much money has been lent out. They can see borrower level data, so there's a full drill down capability here. We've built an awesome global team. I don't know what is going on with the formatting here. Sorry for that. So I came from finance background. I worked in fund of hedge funds and venture capital. Bill Hubert pioneered this business model in the US. His previous company originated over $4.5 billion worth of student loans all across the US for 250 different banks. I mentioned a couple earlier, but pretty much every community bank you can think of across the US used Collegy, or many of them did. And now we've built the global version, right? The 2.0, much more flexible version in the cloud. So Lino has been working with us for the last few years. He's a very talented engineer. We also have awesome investors like FIS and the Venture Center. FIS, as you may know, runs the core banking software for over 50% of the banks in the world. We also have some awesome angel investors and advisors. So Enrique Prieto is a Mexican guy that did the only 2 student loan securitizations in Mexico. He's probably the best credit guy for student loans in Latin America. Tigre is the co-founder of Open English, which is a $350 million education technology business that teaches English online. Some other very important families in Mexico have invested with us, as well as entrepreneurs. So this is something that we've been doing now for a couple of years. We've originated loans, over $820,000 worth of loans to students from 17 different countries. Those are with our first 2 loan programs that we launched. We're now launching 2 more in addition to continuing those existing programs. And we have a loan pipeline or loan program pipeline of about 100 different deals that we're working through. And that pipeline revenue is over $60 million per year. So in the next 18 months, our goal is to launch 10 university networks with our platform, empowering several large banks and thousands of students to access loans through our platform. So how do we make money? We charge setup fees for the setup of the program. That's based on the customizations required. Loan origination fees per loan dispersed. And that can be a fixed fee or a percentage based. And loan servicing fee, which is monthly per loan per month. This is what our revenue and our financials look like. By the end of 2019, we want to be helping almost 70,000 students access education that they might otherwise have been unable to get, with $10 million worth of revenue, and also profitable as of next year. And we're raising a convertible note. So this is a $1 million raise. We've already raised $400,000 with the investors that you saw in the past. This is a typical note with a 20% discount and a $4 million cap. And that's our business, right? It's a global solution, huge market. We already have traction and first mover advantage, and really excited to be here. Thanks very much. So, any questions?
I have a mic. I'm going to pass it around. You'll ask? Okay.
So you said you're adding some criteria to the bank's criteria. Other countries are known for not having trade credit in the B2B space, and obviously there's a void when it comes to personal lending. How are you keeping from losing your shirt or the bank's money with these not first-tier countries?
Yeah, so I guess I showed some of the partnerships that we empower. So, for example, universities that provide either a guarantee or a risk share agreement so that the bank doesn't lose their shirt but incentivizes the bank to make loans that they might otherwise not make, right? And that can be the same for governments or foundations. In addition, so let's just say that you're a bank, you've never offered student loans, and you want to, and you have a consumer credit group. So we can use the same criteria that is used from, on the consumer credit loans, and have your cosigner get, it's the same criteria, but it's the cosigner that's approved with the same criteria, but we can add to that, right? So that can be the different scoring mechanisms with alternative data that I mentioned to help optimize the portfolio, or even lower the risk criteria a little bit so that, some of those students that wouldn't have been approved on the consumer credit side because of their cosigner might be approved because they've got awesome grades, they're going to a great school, their social media profile shows that they're very engaged in their community, et cetera, et cetera. Oh.
Can you guys pass that back there? Thank you.
So you are making the credit decision for the bank based on the criteria they've given you?
Correct.
Okay, and social media is a part of that, so you're drawing in, so,
It can be.
okay.
So
you-
again, they have to approve it, but we make recommendations to help them to optimize that decision.
And is this model being used anywhere else at this time? Have you proven this out in what other countries?
Yeah, so this model's been used all across the U.S. Again, my co-founder pioneered this business model and has done, $4.5 billion worth of student loans with this exact model. This similar model is being used in the UK for, payday loans. It's being used by banks in Mexico and elsewhere for SME lending, where the bank approves the criteria and then a startup that has more focus, like a niche focus, will enable that new kind of customer acquisition channel.
So you're not limited to student loans?
So we are not limited to student loans, but that is our focus.
Anybody else?
So if you're talking to a university, who do you talk to? Who's your client?
So it depends. In Mexico, it's often the owner or the CFO or the financial aid office person, but typically has to be approved by the CFO.
So who are you talking to in Arkansas?
ASU, because they have a campus in Querétaro, which is in Mexico City or just outside of Mexico City.
Is that presence in Mexico a requirement somehow?
It's not. No.
Anybody else?
So, given the increase in costs of college, I'm assuming worldwide, not just in the U.S., and how that might impact your loan decisions or the risks associated there, is there a social aspect to this that's built into the system, or are you targeting just the highest, best credit decisions that are available?
Yeah, so we're actually agnostic, right? I mean, we make money every loan that we originate and then every loan that we're servicing on a monthly basis. So we want to make as many or enable as many loans or scholarships as possible through our platform. And so that can be on the high end, on the low end. The volume is obviously towards the bottom of the pyramid. So, I mean, my partner always says this is the cheeseburger model. You don't make a lot of money from one cheeseburger. It's a volume-based business, right? There is a huge social angle. We definitely, I mean, all of us come from kind of an impact-oriented background. We want to do this because we feel like we're making a difference, and with financing tens of thousands of students, we definitely can. I think enabling government loan programs, we are talking with the state of Guanajuato in Mexico, the government in Colombia and elsewhere about improving the existing loan programs that they have. But the opportunity is to do this, with banks that then enable government lending programs either through the banks or separately, as well as with universities to just enable access to education. On the price is a huge problem in the U.S. It's also relative to average family income, expensive in countries like Mexico, but it depends on the model, right? And we're not just focused on the typical brick and mortar education model. We can do this for online education, and we're very excited about that opportunity because it does potentially bring down the cost of education and open up education to a lot of people that have never had that opportunity before. We do track social metrics, socioeconomic level, et cetera, that we hope will allow foundations and governments to come in to finance students that they've just not had the chance to do before.
Okay.
What's your default rate with your existing portfolio?
Yeah, I'm excited to say it's 0. Yeah, we're really fortunate. And yeah, so my co-founder again did this across the U.S. with over 500,000 students that were financed with his platform. He had a default rate of less than 1%. Contrast that with the actually, that's not that unbelievable for private student loans. I think the average private student loan program in the U.S. is around 1% defaults. You were talking about the issue, with $1.3 trillion in debt outstanding in the U.S., 93% of that was done with the federal government loan program, which has different goals than a private student loan program. And default rate is not their number one focus, right? They're focused on enabling education for everyone. And I think they've done some things that could be clearly improved. But on the private side, this is a very low risk program. Internationally, I think that the default rates will be higher generally, but it depends on the type of program, the reasoning, the type of risk share agreements we get from the universities, et cetera.
Anybody else?
Is uncollege a risk to your business model?
No, so actually we do support non-university type education opportunities. Again, the online, which doesn't have to be university, it can be trade schools, et cetera. We are actually financing students from code boot camps right now in Spain. It's a great, actually, the highest return on investment for a student and the best job outcomes that we've seen are through code boot camps, which is typically like a three-month course where you learn to be a full-stack web programmer and essentially can get a job as a junior web programmer at Facebook or LinkedIn. And I've heard actually some of the employers here say that they'd rather hire someone who's come out of a code bootcamp program than someone who's come out of a computer science degree, because a lot of times the computer science education is a couple of decades old, and just you're not used to the modern tools.
Great. Thank you, Grant. Grant should be able to stick around for just a minute if you have any questions. Somewhere I have a clicker. Apparently it's persnickety this morning. So this is where I'm going to ask you who you know, right? Who do you know that Grant needs to meet? And if you're not real clear on who that is, then let's follow up with Grant and find out from him specifically. But there's a little card in front of you that looks a lot like the one on the screen. And all I need you to do is tell me who you know that Grant needs to know. I don't need their contact information, but I do need yours. I need your name and your email so that we can follow up with you and help facilitate those connections. That's all there is to that. It's really simple. And as a direct result of this program, we have helped our presenters secure a number of significant sales and investments and hires and all kinds of fabulous outcomes. So it pays to ask people who they know, right? So next week, it's Alpha Rank. So you guys should be excited about that. It's another one of our FinTech cohort this year. They are from California and just won Finovate. So if you know anything about that, that's a little bit of information for you. Definitely plan on coming back next Tuesday morning, 9 a.m., same time, right here. And until then, I'm going to encourage you to take the mingling out into the lobby, because this room's going to get turned around real fast for a program that's going to start in here in about 15 minutes. So grab coffee and we'll see you next week.